Thank you, Marty. So I'm going to talk about something very uplifting today. It's going to excite all of you. It's the foreclosure market, right? I don't want to depress all of you, though. So, well, what I'm looking at is really trying to help people avoid foreclosure. So that's kind of the silver lining here. So I get a lot of questions on short sales, and that's actually come up in quite a few one-on-ones. People hear the term all the time, but they don't really have a keen understanding of what they are. So I wanted to just go into a little bit of details without going into too much and having everyone glaze over, but really just go over the basics and share with people kind of the different candidates that I may be able to help that are possibly in some trouble. So I'd first like to start off with the definition of a short sale. So basically, if you have a homeowner, you own a property, you bought it for $700,000, property values have come down 30 to 40%, depending if you bought at the peak and depending on the market area that you're in Orange County. You're upside down. You're underwater on your home unless you put a significant, 40 to 50% down payment on that property. So really, it's someone who owes more on their home than it's currently worth in today's market. And the only way that that person is going to be able to sell their home without coming out of pocket, sometimes hundreds of thousands of dollars, would be to apply to their lender, to have their lender approve what they call a short sale, and that's taking less than the loan balance and agreeing to release the debt and allow them to sell the property. That's the only way that it can be done without the homeowner having to come in and pay off that negative equity position. So that's what a short sale is, and when it comes in most useful is when people are in distress. So let's say you've got someone who's lost their job, you've got a divorce situation, or even simply they've been cut back on their hours, they've got loss of income. They were able to make that mortgage payment before, but now they're no longer to keep up with that payment. So what happens is, if they can't make the payment and they're upside down in their home, how do they get out from it? Well, they apply for a short sale. And this is the best way to avoid foreclosure. So some of the benefits of a short sale over a foreclosure, I put a couple of them on this flyer, but basically it's way better off on your credit to have a short sale versus a foreclosure. There's actually not even a reporting to the credit bureaus that actually would be called short sale. It would be debt paid for less than the full amount, or debt paid as agreed. There's different reporting. Foreclosure shows up as a foreclosure on your credit. And there's kind of some different statistics out there, but foreclosures can drop your credit somewhere between 200 to 300 points, a lot of what we're hearing. A short sale on your credit, it depends on if you've continued making your payments. That's one thing. But if you do have a short sale on your credit, I've seen maybe drops of 75 to 150 points when I've kind of asked my clients afterwards if they'd share with me what it did to their credit. So I get a lot of questions on short sales. I've got a couple of them here. The main one is that I get from people all the time: how much does it cost me to do a short sale? And every time you say something's free, it's kind of like you look at it like, really, what is this guy talking about? How can it be free? The truth is, it is free to the homeowner, because the bank is actually the one that pays for all of the fees involved in the sale. So you've got listing and selling commissions, you've got escrow fees, you've got title fees, you might have taxes that are due on the property. The homeowner is able to walk away from the property without paying any money out of their own pocket, and the bank, whoever their lender is, if they agree to do the short sale, would be the ones that would pay all of those fees. So it really is a free service to the homeowner to help them avoid foreclosure. To kind of make it one step better than that, a lot of banks are offering what's called cash for cooperation, or there are different incentives for banks to provide to the homeowners to actually entice them to do a short sale. There's one thing that's very well known in the industry, is that banks are in the business of lending, not owning property. So banks do not want to foreclose. They use it as a last resort. When they have to do it, they foreclose, and then they have to sell the property, but they do not want to own the properties. So what the banks have found is they're able to get more money net to them most of the times if they even give the homeowner a little bit of money and let them do a short sale versus do a foreclosure. Because what they've noticed on foreclosures is that it takes a lot longer than the short sale. The owner may be disgruntled when they move out and they may trash the place on the move out, where a short sale, they're definitely cooperating with the bank. And REOs, which are bank-owned properties, typically would sell for less than a short sale, a lot of times because of that maybe distressed part of the marketing of that property. So banks are looking for someone really that are obviously upside down on their property but have some sort of hardship, but they've been getting a lot more lenient from what we've been seeing in the last even 12 months compared to what they were a couple of years ago. So if you've got like a little bit of a hardship, you may be able to still swing doing a short sale. So if you find yourself, maybe you lost your job, but maybe you've got a new job opportunity, out of the area, and you're gonna, that person you might know is moving out of the area, but what are they gonna do with their house? They're $150,000 upside down on their home. Maybe they've got some money in the bank, but no way near enough to, bring that, full payoff. Well, we can try to submit that as a short sale. We put together a whole package, and I work with my clients, and I put together all the paperwork that's required, and then really we market the property for sale. We get an offer on it. We submit then the offer with all of the short sale documents to the lender, and we apply for the short sale. Really, I would say in the last couple of years, I've probably only not been able to close one short sale, and that was not because of the bank. That was because towards the end of the transaction, the homeowner actually decided against it, and they just, it was a divorce situation. So the husband and wife couldn't agree on certain things, and it was kind of like, well, we're not going to sign off and you're going to get a foreclosure on your credit. Well, they both ended up with a foreclosure on their credit, but didn't really help anyone. But we have been actually very successful in getting these transactions closed. Put a couple of other things that people have questions on here that I wanted to bring to your attention. A lot of times people want to know what their timeline is. Gabe, I missed my payment, this month. It's the first payment I've missed. How long do I have before the bank could foreclose on my home? So in California, you've got 90 days from the time you miss your payment that the bank can file what's called a notice of default. Notice of default is public record. They file that. Then after 90 days also from the notice of default, they can file what's called the notice of trustee sale. So we've got 180 days. Once the notice of trustee sale is filed, there's another 21 days before it would actually go to the foreclosure auction. What we found is no matter what stage the person is in, obviously it's a lot easier the earlier we start than the later. But let's say I've helped people that got a notice of trustee sale filed. If we can move quickly enough, typically that's 21 days. So maybe they haven't made their payments for 6 months. They've, thinking that they're going to do a loan modification, or maybe they're just putting their head in the sand and they don't know what they're going to do. I get a call. I can help that person if we move quickly enough. What we do is we market the property aggressively, get an offer on it right away. We then submit that all to the bank, and most banks will postpone that foreclosure sale, even if it's 21 days away. All your paperwork is in. They say, oh, this person's going to try a short sale now. Let's postpone the sale another 30 days. And we've been able to continue to get them to postpone that sale in 30-day increments. So someone that can would be out of their house in 21 days because the bank's going to foreclose on it, we've gotten them an extra 3, 4, or 5 months in that property, where they're also able to save some money. 3 or 4 months without making payments, they're able to save some money. So let's see. Last point I put on here is, do I need to miss a payment in order to qualify for a short sale? And the answer to that is no. You do not need to have missed a payment to qualify for a short sale. A couple of years ago, banks wanted to see you behind on your mortgage in order to put you into the short sale process. And we're not seeing that today. Like I said, banks have been getting a lot more lenient with the short sales because I see it's in their best interest as well. It's a win-win situation. And I've helped a number of clients who have stayed current on their mortgage, and we do a short sale, and that even lessens the effect more. Their credit score doesn't drop as much as if they would have missed 6 months worth of payments on their loan, and then the short sale gets processed. So I'll open it up for questions. Does anyone have any questions on short sales or how it works? No?
What about buying them as investment?
Buying them as investment to buy and hold or buy and flip?
Buy either one. I mean, just saying.
So
say you have an investor who says, "Hey, I really want to buy this property."
Yep.
What's that look like in time? How long?
So good question. As far as timeline goes, you've got about, depends on the bank. Some banks, like Wachovia, you can get an approval in 2 to 3 weeks. Most banks, it's running between 60 to 90 days, sometimes 120 days to get an approval on a short sale. So as far as an investor goes, you can get sometimes some discounts on a short sale. More often than not, it has to be a beat up property. There has to be some deferred maintenance and distress to the property. If it's a pristine condition property, banks are doing appraisals on the short sale, and they want pretty close to market value. You may be able to get a little discount, but unless it's really beat up, you're not getting huge discounts. Does that help?
Yeah. To add on to what Max is saying, when it goes into a short sale, if you know of one coming up, is there any type of disclosure that the bank needs to make to, like, say, for instance, the MLS or any type of public notice? Or can you make a phone call and they say, oh, wow, one just came across my desk? Does it work like that ever?
Are you talking about I want to make sure I understand the question. From the bank's perspective?
Right.
So there's no really disclosures from the bank that go out there. We as agents have to disclose to the public in the remarks in the MLS that it is a short sale. And the reason why we have to do that is because the sale is subject to lender approval. Okay. So you could have a property out there listed for $500,000. It might be worth $550 or $600, and someone might offer full price on it at $500. You need to disclose that it's subject to the bank approving that deal. So does that answer your question?
No, what I meant was, like, let's say you have a client and you're helping them with a short sale, and you know that Max's client would like to buy something that's a short sale. Does it have to go on the MLS at all?
A lot of times,
it out between the two parties?
Most often, the banks want to see that it's been marketed on the MLS because they want to know that they're getting a fair price for it. Okay. Yeah. So even if you know someone and you're going to buy a property that they're going to have as a short sale, banks are still going to want it listed with a realtor, and the banks are going to be the ones that will pay those fees, but they want it marketed on the MLS. Yeah.
So if you were to go for one of these properties that's pretty beat up, as you're saying, and you know the market value for the houses in the area are, say, $500,000, but the property is currently valued at $350 because it's been so beat up. Can you get a loan based on the rehab value of the assets that you can lump the cost of the rehab in with the loan, or are they only going to take it based on its current value of the asset?
So really, that's more of a loan question than a short sale question. No, but there's different loans that you can get out there, and it depends. Obviously you can go get what's called a hard money loan, which is a private lender that charges high points and high fees, and they'll loan on the property, not even the borrower. But they also have FHA 203K, renovation loans where you can buy a REO or a short sale. And if it's distressed, you can put different repair costs into your loan, if that helps.
And that's up to like 125% value, right?
So just a couple. No problem. In closing, just a couple of people for you guys to look out for me. If you come across people, maybe anyone that's confided in you and said they're in the middle of a loan modification. The majority of loan modifications actually fail. And it's really hard to determine the exact statistic, but most people do not qualify. I've heard frightening statistics on most people do not qualify for loan modifications. I had a client that I said, they talked to me about doing a short sale. They said no, they want to stay, and I said, okay, we're going to do a loan modification. And what happened was the bank denied their loan modification, and 4 days after they got their denial letter in the mail, the bank foreclosed on it. So what we can do sometimes, if someone's doing loan modification, we can give them like a second opportunity where we can start working the short sale in conjunction while they're doing the loan modification. So if the loan modification fails, we're right there to step in with the short sale offer and try to then work the short sale. Someone who might be getting a divorce or someone who might have lost their job, those are all kind of people that if they bought property in the last 4 or 5 years, and they're upside down on their property, those are people that I can talk to and help. Okay, I think my time is about up. So thank you, everyone.